Hi guys, today I'll be teaching you how to use trend lines the right way. There's many different ways on how to use trend lines, but then there's like simple ways and hard ways. So I'm going to show you the most easy way of using trend lines, and hopefully it can help you with the trading journey, and you can, make money and stay consistent in the market. So, damn, I think this is what I'm supposed to open. Okay. I don't know if I'm loud enough or not loud enough, but I think I am, aren't I? Yes, I think I am. This past week has been a long week in the markets and just in general, guys. So when trading, make sure that you take care of your mindset and, always have some mental exercises and take care of yourself, man. This life has no balance and you make it worse if you don't take care of yourself. So what is this? This is USD JPY. Well, let me just use this. Or which one should I use? Let me just use this actually to teach you how to draw trend lines and how I see I'll come about using trend lines in my trading journey or as a trader. So as you can see, well, this is a fun market to be part of right now. I actually enjoy this USDJPY because this market, this whole chart is an inverted head and shoulders. You know, like when I saw this before, I was like, wow, it was insane, man. Like seeing this market as an inverted head and shoulder, like we don't know what's going to happen now, but then most likely coming back to the downside to these areas, but we don't know. We'll just see when the time is right, man. So we throw in trend lines, right? So most of the time, what I do, of course, in the market, I start by marking my lows. This is the lowest low, but then for now, I think we should mark this low here because honestly, this low is like far from where we are now. So this is the most relevant low, you know, also this one here. You know what we say with head and shoulders or with any pattern. Let me just draw here. Oh my God, what's happening here? What we say with the market is this is our inverted head and shoulders, right? Most of the time, the market does this and breaks out and comes back to retest to continue to the upside, right? So, as you can see here, this is my retest, you know, and now we did have a possible retest around these areas, as you can see. So now what we're possibly going to do is retest this area and continue to the upside. But for now, that's not why I'm here. I'm here to teach you how to draw trend lines. So let me just clear these drawings here to trend lines. The market is easy to analyze. Well, not easy, but simple. All you have to do is, give yourself time. You don't rush yourself into understanding what's happening. Give yourself time to understand, learn, even if it takes you like a year or something to learn these patterns. This is a flag continuation pattern. You know, in the market, we corrected and continue to the upside. So to me, what makes a trend line valid? Now, let's get into it. What makes a trend line valid? Let me just clear this up. So I want to draw a pattern here. So let's say we have something like this, creating higher highs and higher lows. we're in a bullish market, right? Or maybe let's just say we're still here, right? And then I take my trend line and I realize that, okay, we have two touches here and we have two touches around these areas, right? Right now, the moment I see my chart giving me two touches, that's when my trend line becomes very clear. This is my first touch and second touch. Some people say they wait for a third touch to see if trend line is weak, but for me, it's only two touches, like this touch, and you just say we have this touch. Now I know the market goes down here, respects this one, is probably in the middle here. Now I know it's going to come to these areas and try to test this area and possibly go to the downside. As they say, that touches have the highest probability. But sometimes the market won't do that. Looking at this now, we have this scaled line here. It might just come here, create a double top with this one and two, and then goes to the downside. All you have to do is read the market and how it's moving, and there's what we call patterns inside of patterns. So you also have to learn those. Also, trend lines are just the guidance on how or where what the market is doing currently. Are we in a bullish? Are we in a bearish market? As you can see right now, we are in a bullish market. I don't even need to draw a trend line because we are just in an impulse, right? But I'll just use this part here to show you guys. So of course we say one, we have two, and we have this one, right? Now, one would ask, why is this overlapping right here? Right? So I say to you guys, when the market breaks out of a trend line and breaks back in, we call it a false breakout. But then it's not a false breakout per se, because the market broke out this thing here to come and form this double top here, So there's always a reason why a market falsely breaks out of the trend line. All you have to do is just look at it and see why and give yourself time to understand that movement, right? So I'm not going to get into that. It's deep information. So now I know I have one and I have two. You can even say, let me see if I can reverse this market right here. Maybe I can try and reverse. I hardly use this replay button. So let's see the market is here. Key, right? For the first time in my life, I'm using this. Wow. Right. And I do back test, guys. Don't judge me, because now I know you're like, oh, you don't back test. I do back test. Right now we have this, and we say, okay. I would say, okay, this is my first touch and my second touch, right? Cool. First touch, second touch, double bottom, and it went up, right? Now I have these two touches. I'm like, okay, let's see what the market is going to do. But before that, we realize, okay, we are in a bearish market. Now, in a bearish market, you look for sales. Now you see something like this pattern here. Then you realize that, okay, this is a bearish flag, which indicates a continuation to the downside, right? And we also have this rising wedge here. But then let's just play the market and see how the market will actually respect this trend line. Now, wait, the speed is too much. Okay. Now, yeah, I think this is fine. Right? Remember, we had this trend line here, right? You see it broke out and it retested. That's what the market does most of the time. But then let's see if it's going to respect the breakout. Now we have this engulfing candle. Now, I would have entered here myself, but then I would have been taken out. Right now, let me just pause. Now, wait, when it's like this, now it's like, okay. Like I said before, right, guys, after this engulfing, after this engulfing candle, this one, I would have entered sales, right? Like, okay, this is me, and now market execution probably here to these areas, right? And this is my my stop loss. What are we on now? Time frame, a weekly time frame. Okay, let me just use this weekly time frame. Probably my TP's stop loss there and TP here, right? And then of course, boom, it takes me out, right? I took a loss on this. Fine. Now the market is here, and I realize, okay, the market didn't respect my 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 sell entry to the downside, right? Because most of the time when we expect this area, we're expecting to go down to the downside and test the support side of the trend line, right? Now I sit down and I see, okay, this market is not respecting me in terms of that. But then what we have here is this, right? So guys, I use support and resistance also. What we have here is this. What do you guys see here? I see an inverted head and shoulder. So there's a possibility of us doing what? Buying now until these areas. Now I say, okay, we failed to what? We failed to sell to the downside. Now we have to we have a head and shoulder, an inverse head and shoulder. So now what I say is, okay, this head and shoulder confirmed with this engulfing candlestick. Now I'm entering buys, probably put my buy stop around these areas and my TP here, because for me, most of the time I say, this is a complete head and shoulders. It has to retest the same areas where it started, right? Now this is it. This my stop losses won't be accurate, guys, because I'm in the weekly time frame and I use the daily time frame. I use the 15 minutes time frame to set up my stop losses and entries. So this is what I'm seeing now, where the market is like we took an L, 1%, and now I'm seeing a buy. Now let's see what the market does. Right now we play a game. The market is playing games. The market is playing games. Boom. We are triggered in the market. Boom. We are playing games. Boom. We're in profits, losses, and whatever. So let's just wait and see what the market is going to do. And please don't mind the stop loss. Let me just put the stop loss here because it might take me out. But I want to show you something, guys. You see now we're going up. Back in losses again. This is probably 4 hours. Oh, this is different weeks. Oh, wow. Wow. And now, let me just pause this again. Looking at this, I think I need water, guys. Looking at this, you see that, okay, this is more of a correction movement than anything. We're moving correctly. You can draw a trend line here to say, okay, now I'm in this trade, right? And we're failing, we're busy correcting. Now, we're setting this trend line to say, if we close above this trend line, below this trend line, I am closing all my trades in losses. So I'm taking my daily loss because now I know that the market has changed its direction. This is our lower, higher low, higher high, higher low, and then possibly going to create other higher high. So now let's move again. Let's see what's going to happen. You see, now we're going up. Now we're playing games. Boom, we're closing. Look at this. Look at this. We closed below, right? And then immediately we went back in false breakout. Now one would say this is a false breakout, but now this is what? Sorry about that. This is a double bottom. The market wanted to create a double bottom for us. As you can see, it doesn't matter if you put your trend line here. There's different ways of putting trend lines, but they all make sense though. Double bottom or double bottom. Oh my god, what happened now? Why did I put my thing? I was supposed to be like this, yeah. Okay. Now we are in the profits. Now we say, okay, I'm moving my stop loss. Now my trades are in break even. I would have done this, put my trade in break even, right? If it comes back down, I'm not taking an L, right? Now we move. You're watching it. see what it's going to do. And now it went back down again. Boom, it went down. Took me out on break even, right? And then it went back in. I would have entered again here if this is an engulfing, right? Boom, look at this impulse. Boom, it hit our TPs and retraced. This is what I wanted to talk to you about, guys. Now you look at this and you see that, okay, I took an L for self, and then I realized that the market is creating break, is creating inverted head and shoulders. And then I entered my trade. I was in buy, and then I moved my stop losses, and then went out in break even, and then re-entered again, and it hit my TPs, right? So I took one loss, break even, and a win. My win was 2% probably. Let me see. But then it's not going to be precise because, as I said, let me just move this. 2% win, 1% loss, and the break even is of course zero. And you can see that, okay, now we did hit our TPs or our targets based on this inverted head and shoulders we saw here. Now, this is what the market has for us, right? Now we know why the market falsely broke out of this trend line because of this head and shoulder, right? Now we see that, okay, this market is quite corrective, right? Now, this is what we have here. This was quite corrective. Now, I draw my trend line like this. Let me just scale down to the daily time frame so that I can actually, right. So now, me drawing my trend line, I told you I take 2 points. So my first point was going to be this one, and my second point was going to be which one? This one. Now I realized, okay, we have our first touches, second touches, and third touches. Sometimes I also take this point here because if you scale down to the 4 hour or 1 hour or 15 minutes, there's a thing here. There's a small correction here, which means this is my first, second, and this is my third touch possibly, right? So now I realize, okay, we have this pattern right here. This is a correction, and now we are in a bearish. We are in a bearish trend, right? And we are connecting to the upside. This is a rising wedge, and this is a double top also. First touch and second touch this side, and we moved correctively to these areas. You see, this is how I read the market most of the time. Now I realize, okay, the market is going to move something like this, probably, possibly, as we've started, of course, like, and the 90% rule. Now let's see how the market plays out. Boom, we didn't have much corrections or anything, but then boom, we hit our TP here. Then the market decided to come back. Let me just pause again. This trend line, this rising wedge signaled to me that, okay, this is definitely a thing. Where would I have entered my market? The market, I would have entered here. This is the daily. I would have probably entered here. This small green thing in the lower time frame is a correction. Let me just go to the 1 hour to show you this correction. Okay, thank you for explaining to me. Okay, guys, I know this video is getting too long now. Where's my chart? Like, I'm trying to explain. Oh man, we went to the daily. Okay. I think we went to the current market structure. Sorry, Miss Jackson. Okay, guys. Okay, this is it. This is it. This is it. Just to see this part here, like how trend lines can guide you into, being consistent in the market. Okay, as we wait for it to load, my Wi-Fi is giving me problems, guys. My Wi-Fi is giving me problems. It's giving me problems. It's giving me. Okay, why is this not working now? Come on. Okay, let me just do it for. We have a continuation pattern, something like that, some out of run. Now, guys, there's something that I want to explain. Like after we touch here, you see we have an impulse and then we have a bullish flag here, clean textbook bullish flag and continuation to the upside. Sometimes people get confused when they, let's say, let me just draw here, guys, please. Can I just can I just draw here? Clean, right? So now we have, let me not even use that, I want to use this. We have this impulse, we have correction, and then we have continue impulse, correction, inverted head and shoulder, right? And then we impulse, and then we impulse again, and then we have a correction that's like that signals buys, like a small correction that's like this instead of, you know, a falling wedge type of correction. We have a falling wedge type of correction. And most of the time people think, you know what, we're going to go out there and buy because the falling wedge represents and that's how which is buys in a bearish market, right? But what we need to understand is where the market is. Like for example, the market tested this area as resistance, right? And we impulse to the downside. Whether you get it, when you get such a pattern here, 90% of the time it's going to continue to the downside. It doesn't matter if it's giving rising wedge or falling wedge, just know that the market is going to continue to the downside. Or it might come, it might just come here, double top, and continue to the downside. But then you also need to listen to the market. When it does that, you have to wait for your touches. Like for example, if it's like this, of course you're going to have a touch and have another touch and have a dead touch. On the dead touch, that's when you enter and sell in the market. Right? Let me just delete this there because it failed working on. So I don't know, guys, if you understood me, but then that's how I use my trend lines and my other knowledge. Like I have a lot of knowledge in my head that I use to actually execute trades and like optimize my winnings in the market. So I would have entered here, if not there, somewhere around these areas. And my TP would have been here. So let's just say I entered this market by again the retest engulfing here. And this is a safe entry, and this is my stop loss, possibly. Let's say I'm swinging trading this. Imagine 6%. It was going to be 6% or probably more because now we have this break and retest again here. I would have probably said, okay, if I was there, I would have been like, okay, this is another trade that I can enter here. We have an inverted hammer, clean, 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 clean. You can see like 2 trades already. Like, because my stop loss would have been somewhere around these areas. So I don't know if you guys see what I'm saying, but And as you can see, I didn't go after the whole what impulse. I just went for what I saw at that time, and that's all that matters. You don't have to make or like be in every impulse or the whole impulse. When you reach your targets, just move, take your profits, and wait for another chance to enter the market. So this is what I did here. So I hope you understand, guys. Please like, comment, share, subscribe. I don't have subscribers. I have like 5 of those. So if you guys could subscribe, and you know what, man, I share a lot of knowledge with you, and I have signals that I share. Like, you know, I could even analyze this for you guys, but then I'll analyze it in the weekly breakdown, probably tomorrow or Monday. So thank you guys.